Hey guys, it's Will again. I'm going to go through the markets, and if you've been watching my videos, you know that I've been sort of predicting, or I've been mentioning quite a few times that the markets were, probabilities were that it was going to keep going down. So hopefully you've been watching my videos because I want to tell you kind of what I'm doing, and that's going to hopefully help you. Because a lot of times you see these little surges, but nothing really happens with that. So I'm going to go through the market indices and some things that you can look at doing. But hopefully you've been checking out my videos because for a while I've been mentioning the negative look of the charts. So some people are buying the dip, and that might work for them as well. But for me, I want to see a good uptrend chart. So anyways, I use TC2000. If you want to get it, check out the link in the description below. You can get free trial or $25 off purchase. I've got the gold plan with real-time US stock data. For those of you who have it, thanks if you've purchased it through my link. It helps support the channel. But I've got different charts here. Like if you look down here, I've got tabs, and there's different views. So you can have a completely naked view, what I call. There's no moving averages or dots or anything. So you can sort of see trends and draw a nice, you can just look at the price action. And there's other ones that I could talk about as well. But mostly I use a basic candlestick chart. I don't talk a lot about candlesticks here, but I do consider some of the patterns and the looks of the charts of the candlesticks as well. So if you look at, like right now, the Nasdaq, I mentioned in the past videos that even though we were above the 50-day moving average at the time, you're starting to see lower highs. And momentum had crossed down and was still below. And this is price percent oscillator, or MACD is the same sort of thing. But now we've broken down below the 50-day moving average. This is the pre-market candle right now. So you see it says 823. Up here you'll see pre-market. So that's one of the nice things with TC2000 is you're seeing the current price action. If you go to a shorter time frame, you see this gray band, which is the section that's pre-market. So you could potentially trade if you wanted to. Lower volume, of course, but so now that we've broken, even on Friday it was below the, this is more indication the momentum is curving downwards. So that doesn't look good. IWM hasn't looked good for a while. It did break out here, but you can see it's been in this flat consolidation period. But now there was a bit of an uptrend. It spiked and then it crashed right down through that. So you see here how it comes back up and down again. It either bounces off one of the moving averages or like near the 50-day, and that's another downtrend. See the momentum as well. So sometimes momentum can help you. Like if this goes up like this, you say, well, it's not above the 50, or you could say, I haven't broken up, I haven't crossed with the MACD, or I haven't gotten above the zero line. So there's different ways you could look at this in terms of holding off just on an immediate. And the other thing is, when you break a downtrend, you want to see higher lows established. So this just came up and went back down. So these are things that would keep you out of getting back in. The Dow Jones, at the time it was kind of the best one, even of the indices, because it was a bit of a rotation into like industrial and financial a little bit, but and you still were above the 50-day, but Friday it dropped, there was a down candle. So what happens is you see this gap down, and now we're down here in the pre-market. So that's the first red dot, which would be a cross of the green dots here. So that, if, at the end of the day, if you wanted to wait, that would indicate if you were to sell your position. But you see how it kind of crossed back up and then it's curving back down again. So, and then you have the S&P 500, same sort of thing. An earlier warning sign. This candle, if you want to talk about candlesticks for a bit, this is a dark cloud. You have this dark, you have this downward candle that pierces more than 50% of the candle, and then you had a gap on Friday. Now we're doing another gap down. So it's emotional. It's an emotional market, which is hard to trade or swing trade in. You don't have these nice smooth uptrends, you know. If we go back to the Nasdaq, this is like a bearish engulfing. It's a big candle that starts above the green and ends up down below. That's a negative sign. Obviously, the gap downs, lower highs. So if you look at the VIX, that's the volatility index. It's something you could trade, like if you want to. It's usually spikes, but it's an inversion to the markets. So anyway, yeah, I wouldn't be buying stocks in terms of longs. You know, if you're short, if you like to short, you can do that with whatever you feel like. But another option is inverse ETF. So you have SH, which is the short S&P 500. For me, this isn't quite in a tradable. I wouldn't probably get in right now just the way it looks, but there is the first green dot. This is early in the pre-market. PSQ in the States is the short of the Nasdaq. It's above the 50 now, and there's an uptrend there, so that's potentially a possibility. If you want to go a bit more leveraged, there's Direction Company has this thing, they call them short ETFs, or if I go bear, I think it is 2x. I can get energy bears, I can get S&P bear. These are like 2x, oil and gas, gold, stuff like that, Nasdaq. So if I click on ERY, you can see that looks pretty good in terms of the chart, because you have across, like, yes, on Friday there was a green dot, a close above the 50, and this is MACD. This is increasing actually since back here, but now we're above zero. So energy looks good, of course, with some of the fears of the next variant. You know, that oil is decreasing because travel and stuff. But so there's those. You can type in inverse ETF. So nice thing with TC2000, if I type in inverse ETF, you'll get some, or you can type in bear, I think. Yeah. And then I've created for Canada, I've got a few. I just have a tab on here. Bitcoin even has a, you know, if you look at the, you know, now you're above the 50 and momentum is increasing, you're above the zero line. So right around here was a good entry point in terms of increased, in terms of inverse Bitcoin. That's the volatility index. And then you have, you know, S&P and Dow and even the Toronto Stock Exchange. There's an inverse of the cannabis has not really been doing well. So this is the inverse in Canada ETF. So there's opportunities there. So that's if you don't want to short. You could do inverse ETF. So basically, yeah, I just wanted to explain, you know, show you what I thought of the markets. I'm not going long on anything at this point, but you know, hopefully I've been helpful. You know, these are just my opinions and based on charts, but if you go back, if you want to see what my track record in the last few weeks, I definitely have been indicating, you know, some concerns. So I'm not giving financial advice, but I'm just going through the charts and seeing if that helps. And there's different ways you can trade, and everyone has different ideas, but hopefully, you know, I can be of some help. So I'll talk to you in the next video. If you want to get TC2000, check out the link in the description below for a free trial or $25 off your purchase. Thanks. Talk to you later.